Now. So we will kick things off. Welcome one and all to this week's edition of the Chroma Market Roundtable. This week we are welcomed by Victor, Luke, and none other than the Chad himself, one of the OGs in the crypto space and a longtime friend of mine, BC Richfield, who is joining us today to talk markets, maybe give us some insight into how he trades, and yeah, that's basically it. I'll let him give a little bit bigger of an introduction when we kick things off in earnest. But yeah, this is the format of these BCs, just so you're aware. It's just a
Mhm.
very casual discussion on the markets. We have a list of topics, but we don't always stick to them. And yeah, as much insight into kind of what you're looking at in the charts, how you've been navigating this price action, and what you're kind of excited about in the markets at the moment would be fantastic. So to kick things off, maybe BC, you can give us a little introduction. Who you are, maybe a quick whistle stop tour of your trading journey, how you got from the very beginning of that journey to where you are now. And then we can kind of get into the markets a little bit more and talk a little bit more specifics. But an introduction would be great.
Yeah, awesome. Well, thanks for a great intro and a great welcome. One of my favorite traders and people, and honestly, I'm not just saying this. I think Chroma, I think is the really best education space out there. I really, really mean that. Obviously, since I stepped down from the education side, uh, but no, it's really cool. So look, I came from a business background, actually, not particularly highly educated. I did go to university. I dropped out, funny enough, to buy a music studio. I figured that the world of traditional finance and that I was being geared up for probably wasn't going to be suited to me. Then had a wild ride in the music industry, started a couple of businesses, got some private equity investment, taught me a lot about business, taught me a lot about life. And then I just caught the trading bug, just really, really randomly off a friend. Taught me to trade some FX and some indices, and ended up getting a commission only job at a prop desk, a proprietary firm based out of Germany, which was a wild ride as well. Ended up starting the crypto desk over there, which is what got me into crypto. So I was actually kind of came into crypto a lot later than I came into trading, and just found it this amazing wild west of a space where things just had crazy volatility, ADRs off the chart and stuff like that. And then I really kind of, people had no idea who I was. I wasn't particularly vocal or prominent on Twitter or socials. And Adrian, a guy you guys will know as Crypto Burb, came along to me one day and said, "Look, I want to make the best education Discord in the space. We've got some really good things going on. Do you want to be part of it?" And I came into that, and obviously traveled a lot. And thanks to Adrian, met Follis, I think, probably everywhere other than where we live. Dubai, which is pretty
Or
crazy.
yeah.
Yeah. And yeah, I mean, just fell in love with crypto for a lot of reasons, right? But within crypto, I probably wasn't ever the best kind of investor in it. I think I missed a lot of upside, the kind of when the buy and hold days were working. So I refined my trading to swing trading, which is what I was doing a lot of as I was working for the different funds. And then just, I don't know, just it stopped really suiting me. And in crypto, I found it moved really, really fast. So I refined that to intraday trading, and I did that by studying the best intraday traders in the world from legacy markets, and then looking at correlation factors and data and how that can cross over to 24/7 markets that we have in crypto. The use of volume, for example, really, really key basics. Whether we're trending, consolidating, kind of a lot of similarities to what you do on a higher time frame, in truth, Follis, just on a lower time frame with a little bit more volatility. And yeah, I try and see the markets in a really, really simple way. I still trade a lot of stocks. I still love trading the indices, but happy to share as much as anybody has curiosity for how I trade these crypto markets on an intraday basis.
That's awesome. Yeah. And I would love to get into that a little bit more into the conversation. But for now, I'm going to circle around to Bitcoin. And we're just going to maybe look at kind of what's happening in the chart. I don't know if you're in a position to share your chart. If you're not, that's totally fine as well. But I would love to know, you know, maybe we can talk a little bit more about your analytical style first. Like, what do you actually look for when you pull open the Bitcoin chart? What are the levels that have your attention? What are the price action concepts that have your attention? What do you kind of look for in the chart before you even get into a trade?
Yeah, sure. Really, really good question. I mean, so much of my trading now is geared around intraday. So, I've kind of got a pretty clean chart up here that I've just added a couple of bits to. You know, obviously you can't go anywhere on X without seeing your posts, right? So obviously I know that, which is a good thing, by the way. But you know, I know we're fairly similar on this, right? For me, the market, any market moves in two distinct phases. You're in a phase of balance or you're out of balance, right? And being able to ascertain whether you're trending or whether you're consolidating can make or break your entire career. So I just try and make things as absolutely simple as I can. And in one of my first prop job, I had this really nasty guy who was head of our pod, but actually really taught me a lot. And he would do a couple of things. One, if you were buying anything that was going up, he would just scream at you, saying, you know, you buy when there's blood in the water. Simple, right? It sounds simple. It's not, especially when you get this massive, like 200-pound bloke screaming at you. But the other side of it was, you know, if the market's not aggressively expanding and, you know, attacking new value higher, short retraces, aggressive retraces, and then moving, you know, like we see, you know, in these moves here. And it's why I love your kind of view on market structure, because in truth, it's always something that really messed with me. Market structure, you know, you micro structure in here, looking at these. And I think actually what you want to do is really just compress that chart up and just focus on those real kind of, you know, those real sharp points that you get, right? And then I'm just looking for violence and volatility if we're trending. This is kind of a good example of that. We kind of came out of this protracted range. It got really messy. I love ranges. I just see ranges really clearly. So, you know, short the high, long the low, and just do it until it stops working, right? And you can just draw these ranges however you want. I mean, if you're going up right to the extremes, and I would start, if I was looking up to this point, for example, I would start with a clean high, clean low. As soon as I see that first rejection, I'm already in a position there where I'm like, okay, I can understand here that price isn't now being able to move along this point. We've got passive sellers up here that are controlling the market. Aggressive buyers are smashing into those sellers and we're coming back down. But I would still want to be a buyer back down here, right? And you know, this just isn't enough for me to not, you know, to then want to start shorting this, right? I want to see real true aggression, and we'll look at that in a moment. But you know, I look at the dealing range, all right? So when we're in this point here, looking for the low to the high, I extend that along. I know a lot of people do this differently. But for me, then what that does is it gives me kind of multiple confluences here. I'm willing to take aggressive positions outside of the range, but I will size down for those to come back in. But when we're back in the range and we've had that deviation, and typically you will see it from a volume perspective as well, then you know I'm fully committed to POC, but I'm fading the highs as soon as we're up there. In terms of looking at this for what I'd want to see for like a breakdown is something like this, right? And while we have the volume, the volume profile here, if we just move that out of the way for a moment, you can see it really cleanly without it, right? You can see price starting to get weak here. It's coming into some highs. We're seeing consistent rejections. For me, at that point, I'm saying to myself, sellers control the market, right? The first thing I do is then I look left and I say, well, where did buyers last control the market, right? And buyers last controlled the market in here. Yeah, you know, like this area, this consolidation, this order block, this demand, however you want to kind of look at it, pops up, takes out the range highs, we get the deviation, price steps back below. So then as I'm looking and saying to myself, okay, these sellers, what's the chance that we come back into this area here and reject? Well, it gives these buyers a great opportunity to get out on higher time frames, right? And one of the things I learned in kind of legacy markets is that, you know, anything under the daily, maybe the 4 hour on crypto, you know, you're not trading with the big boys. The position players are on higher time frames, right? And they're looking for these really clean levels. So if we get the range breakdown like we did over here, obviously we, you know, I'm maybe oversimplifying this. We're looking for other confluences as well, like the use of volume. But when we get those kind of breakdowns, then you can see what starts to happen. The dynamic of the market changes really aggressively. So it goes from these kind of smaller crossover candles. You see these small flushes. Yes, you can get these big moves up, right? But you know, one move does not make a trend. Ultimately, what you start to see when this settles in is you start to see price really struggling in this case to get back above previous highs, and gaining, you know, pretty aggressive acceptance below the lows. When we're in a trending market, I'm looking for those aggressive flushes. I'm using volume profile on the impulse leg, as I would call it. So, you know, rather than looking for a whole dealing range, I'm looking for the last kind of area of supply here, you know, or order block. I want to go from the high of that and I want to go down to the low. and then I just want to understand where the value area is, right? For me, this is where major players are going to transact. That's where they're kind of buying, they're selling, they're interacting. We can see that reflection in volume, and you see the reflection in price. And the key is just don't be a twat. Just sit on your hands and wait. And honestly, that's just going to be the hardest lesson for everyone, right? Not don't be a twat, but patience, right? I think Trader SZ, who became like a mentor for me years ago and a really good friend, he's got this brilliant thing on the top of his profile, and it just says something like trade and then trigger, and in the middle where it just says wait, it just says this is where you
Sure.
survive, right?
Yeah.
And that's absolutely the truth, because we all go in, you all want to trade every day. Something else I do look for is things like delta, right? Whenever, if you're somebody that uses volume, these areas of low volume act as a magnet for price, but ultimately they should also act as a rejection. A lot of people look at the high volume nodes, and these are where the decisions getting made or the most transactions are taking place. The markets needs to be an efficient vehicle, and it wants to be an efficient vehicle. So if you kind of layer those two things up on a higher time frame basis, trending or consolidating will make or break a career, right? Now, I know from your perspective as well, right? You're looking at a very similar area for price to come up to here, but this for me, I was kind of long in and around the kind of 26th to 28th, and that's so the 16th to the 18th, because we had this breakout, right, and price just sustained it. There's great studies on volume spread analysis. A guy like the Flow Horse, I don't know if anybody wants to kind of get into that side of things, but he's got this amazing course, a guy called Ryan.
Mm.
And it's about you looking at it from a time perspective, not volume, but time spent outside of the range, right? Ultimately, we're asking ourselves about acceptance here.
Yep.
Auction market theory, which is a massive part. I know another thing you guys you train people in really well here that a lot of people don't. Simplify the market, right? If you're getting sharp moves up and price is kind of scared of that and getting back in, and I give these amazingly terrible analogies that I make up, so I'm going to treat you to one now. And I'm kind of looking at this as like a shoal of fish, right? And if we look at this as a shoal of fish, and fish typically want safety, yeah. So we take the volume profile away. What happens is when you're within the shoal of fish, we'll make it blue so it doesn't look quite so ridiculous. What happens is a few outliers, within that shoal, the food's going to get depleted pretty quickly. You're going to get these people and these fish that want to break away from this. The problem you've got is you don't get that in enough volume. You don't get that with enough commitment. You try and get that breakout and they just get smashed to pieces by predators. Then what happens is they quickly retreat to the safety of the shoal. This happens until those daring ones kind of sneak back out again. They realize, well, hang on a minute, either we're overwhelming the predators here or we're kind of moving away. Let's move towards the next shoal of fish, right? And the next shoal of fish for me is up here. So I try not to overcomplicate it on the higher time frames. If it looks to me like we're trending higher, then I want to be using that trend model intraday, looking for those kind of pullback plays. If price gets back in this range, and obviously would use that from a volume perspective, right? Then it's simple. We're just looking for the rotation with inside the range. And that's kind of how I'm seeing it. So for me at the moment, while equity markets behave, then this is the key area. Up to your kind of 86s, stuff like that. I'm going to the shoal of fish. Brilliant, awesome. Normally people just absolutely killing me for my terrible analogies. If we've got time, I'll share some more with you later. But on a kind of, I know that's not a very good nutshell, maybe more like a walnut, right? But and that's what I'm looking for. If it looks long and it's trending, that's what I want to trade the model. If it looks like we're consolidating, then ultimately I will always refer to a range. Yeah. If it doesn't slap me in the face as a trend, I'm either staying away from it completely or I'm treating it as a range.
Yeah, absolutely. And I mean, that's exactly the kind of stuff that I speak about on my streams. You just touched on it there, time, price, volume, like where is price trading, how long is it trading there, and how much volume is it doing there, right? And as you say, we spend so long trading at the kind of periphery, at the extreme of this value area, at this shoal of fish, as you say. Um, and it just started looking more and more like we were gaining acceptance there. The market was getting increasingly comfortable there. We spent like 2-3 weeks trading there, and now we're seeing something of a breakout, which to me is just that's classic auction market theory, right? It's time spent at the periphery of a value area. Now the auction is saying, hey, maybe we want higher prices, maybe fair value for this asset is actually higher than where we've been trading for the last month or two.
Yeah.
Fascinating stuff. Want to go to Victor now. Victor, I know that you are an intraday trader.
Mhm.
I mean, this question could equally go to Luke, but I will go to Luke afterwards. Also, a volume profile guy. How does this resonate with your style of analysis? And are you picking up things here, or is this kind of music to your ears?
Oh, it's all of them. Like I totally agree with our guest's analysis, and I've known him for I think 2 years now, and I knew that he was a really smart guy, but I didn't necessarily know um, how much his the tools that he's using for his analysis are similar to mine. So because we're using the same tools, like for me, the conclusion that we come to is pretty similar. But like you also said, it's music to my ears to hear that such an experienced trader has like the same levels that he's looking at as me. Because I'm also looking at that reclaim of the previous value area at 86K. Could you please stop sharing your screen so I can share mine? I mean, it's gonna be pretty much
Yeah, you're
almost
gonna
the
have to keep
same.
me updated with this, Vic. I was messaging Marquise like 5 minutes before this show. I was like, how do I even join this, right? So yeah.
No, lovely. So yeah, I shared this chart on X in my channel before. Like now, like you said, because price got out of that consolidation where it was balanced. Now it's in an imbalanced state, in my opinion. So the goal of price right now, in my mind, is to seek a new balance, whether that is at the value area above or the value area below. That remains to be seen. Now, because we're moving up and outside of the previous value area, I think it's more likely that we go to the value area that's above us, but still, that's at least for now, that's not a given for me, given the fact that technically we're still in a downtrend. So I also have this possibility that we accept back into this value area. Um, Also something else that I'm looking at, because I also want to bring something new to the table, not just reiterate what BC Ritual said, but in maybe less conclusive words, is I'm looking at ATR on the daily, and this is an indicator that measures volatility. And what I noticed is that most of the time when we exit these ranges that we make, it usually happens with a sharp move, so the ATR is pretty high. Like this would be the best example when we consolidated, so the ATR went down, of course, because volatility is lower, and then we get this really sharp move to the downside with ATR increasing a lot. What's different this time around is that we are getting outside of the range, but with ATR again at a yearly low. And this area is usually when the violent moves started happening. So I'm more certain about the fact that we're gonna get a really strong move sometime this month, rather than in which direction the move will happen. So this is why I keep both possibilities open. Either a sharp move back into the value area above at 86K, or a sharp move down back into the value area lower at 72K. But still, I expect fireworks this month, and I'm not positioned. I'm not certain about which direction it will be in, but I think we'll see some exciting things this month.
Yeah, I agree. I agree. Luke, want to get your take on things now, particularly with regard to the more intraday side, the more, I guess, the more scalp focused side. And this is something that I'm going to loop back on after you speak, Luke, and just get BC Richfield's take, because both of you are intraday traders, both of you are predominantly scalpers. Is my kind of understanding. Maybe you don't use that terminology, but a lot of the time, I'm looking at these high time frame charts and realizing that you guys don't necessarily need to have, this incredibly detailed read on the market, because you're more focused on what's happening, inside the daily candles. Just curious to know, like, I'm curious to get Luke's take on that, and maybe how he's trading this current PA and how he's navigating this current price action.
Yeah. So first of all, this is I think a bit of a weird like full circle thing for me. I think BC, we did a stream or did a call together maybe like 6 years ago before I was even Toros. I think it might have been, and and then this was yeah, I think it was that long ago, and then yeah, probably the first time that we've really spoken since then. It's yeah, kind of crazy. Um, so after like 6 years, it's good to yeah, good to speak again. Um, but for myself, yeah, I think it really great to hear your analysis, and I have like exactly the same view. Volume is something that I use all the time with my trading. using the point of control, using the value area is massively important. But the way that I'm trading now is much more intraday, not too focused on what's going on the macro, and just focusing on trades that I can find on like just every time I come to the chart. I really like your analogy on the shoulder fish actually, and I think that's something I might use, like shoulder fish, herd of sheep, that kind of thing, because it's almost like the way that I've been trading this whole range has been right. When we're coming back up to the range high, I'm looking to short it, and I tried a couple of shorts last week, trying to come back into value area because price was just consolidating at the highs, and you don't really want to be trading a breakout when we're not really getting that volume. But what we're seeing now is expansion above the range highs and a movement like into what is, at least for the last few months, a new phase of price discovery. And I can almost see it as like you have this shoulder fish that's like swimming around, and we had like a couple of little sweeps of the highs, and then it's like, right, okay, come back into the range, come back into safety. But now we really seem to be like getting that volume outside, and now the market is following that. So it's almost like this whole show is now following what was just a few outliers, and now we're extending up into price discovery again. So for the first time really this week, I've switched that bias into just like I just want to continue to trade the trend. So I did a call just before this. I'll do a screen share anyway. I'm not going to be sharing anything on the higher time frames, but I'll add this in just so we've got it here. But really, it was just a case of looking for longs. I know we're high right now. But for today, using volume again, I use VWAP a lot, and I'm expecting there to be a move up to around about 82k. So the confluence that we've got around there, just talking about another volume indicator, is that yes, we're outside of value for the range that we're in. We're coming back into the previous range from November to January last year, and we're approaching the anchored view up from our all-time highs. So this is the area where I would expect to see there to be, if we're gonna get some like major resistance and price is going to start to struggle, I'm looking at the confluence around there where we've got the VWAP and we've also got our 200 EMA. So EMA is again not something I use too much, but on a first attempt to break it, I think we're going to see some kind of rejection. So really for myself, it's just been about like, now that we're outside of the range, it's just trading the momentum. And again, the VWAP like comes into play, so important when we're on a trending day like we are today. So we can see that the VWAP's been trending higher for the whole day. We don't really have a range that we can trade. We are trending, so we can't really be using the volume profile in a traditional sense, because otherwise you're going to keep shorting it. You're never going to get back into point of control. You're going to keep getting stopped out. But when you have VWAP that's trending like it is today, once we create this time and space outside of it, so we can see it was just kind of hugging along VWAP for the whole day, a little bit of chop around there, and then finally we get an expansive move just before New York Open starts. And then for about an hour, so we went live for New York Open today, and we're just waiting for that tap, like for VWAP to be tested. And then for myself, it's like once that's hit, it's like, yeah, okay, that's it. Like go. This should now launch to new highs. And you see it so often when you're in a trending day, how the VWAP can just act as a launch pad just to send price to new highs again. So I took this trade when we were on the call. And then there was a second opportunity to get back in, and we're talking about balance and imbalance. Okay, you had a decent move down, an immediate bounce, created some nice imbalance at the lows here. Price comes back in, consolidates, another opportunity to get in, and then you're essentially just looking for continuation now. So from just a scalping perspective, day trading perspective, this has been a really nice day. And one of the first days where I felt comfortable in like basically top blasting. Okay, we're already up a lot, but now we're in price discovery. I feel confident and comfortable enough to actually go long. Whereas last week when we were still in the range, it was really, really difficult to go long, because you know that, right, we could dump at any moment, we could reject at any moment. So yeah, that's the way I've been trading it today, and price action has been really nice for the last few hours. So yeah, hoping to see it go a little bit higher.
That's awesome. Thank you for that, Luke. Want to circle back to BC now, and maybe, yeah, can you first of all, new lore dump that I wasn't aware of, but that's that's good to know that you guys go even further back, because I mean, we were saying when Luke joined Chroma, we were saying that, you know, me and Luke had lore, because he was like, my first ever call with like for crypto after I went full time, which was like 4 years ago now. Was with Luke, and that was an interesting full circle moment. But I also love to get your take
Yeah.
on maybe on that style of intraday trading and what Luke was looking for in the charts there, and maybe how that matches, what kind of similarities, differences there are with your own style of intraday trading, BC.
Yeah, for sure. I mean, we almost took the same trade today, I think. So this was posted live in our server. Let me just share this. So kind of similar principle, really. My charts just look like they've been drawn by a child compared to Luke's like really advanced ones. But by the way, first of all, things to say, this is hilarious. So when we met in Singapore, Follis, there was a dude at the table called Luke, and I turned to Deborah from Binance, and I was just like, "Shit, this is Luke, right? Like, the British guy." I spoke to this guy like about a year or two ago. This is mad that we're here on this. And she was like, "No, that's Luke from Teal Street."
Luke from Teal Street, yeah.
That's the first time I met Luke, right? I thought Luke was a different Luke, but I think this was, yeah, leads to this. It's a funny and small world, right? But my God, I wish I had you guys when I was learning, by the way. It took me a long time to kind of piece this kind of stuff together. I think in the early stages, it went from just no information being out there at all, and then to just this wild information dump that most of it was just toxic and absolute nonsense. I mean, if you didn't have a group longing just a 4-hour bull flag, then, you know, they didn't have a plan. But basically, you know, my kind of approach is very similar. And what I would say, if anybody's considering intraday trading, and because this is, not that this isn't going to go out, but especially because this is for members, right? The absolute first thing I would do is put a session VWAP on your chart, right? Don't try and catch tops and bottoms. Just ask yourself the question of whether you're ranging or consolidating. And then just get a really simple like daily open, which is fixed to UTC midnight. And this kind of set the trend in motion for me today. Yeah, we're bullish because I'm just using the SVP here, session volume profile, and I'm just looking for value migration, right? I'm looking to see if these profiles, and let me just, if I get rid of the price, it might look a little bit clearer on the smaller screen for people. But yeah, I mean, if you just look at these here, right, look, this just kind of tells you what you need to know. Just follow the damn lines and the boxes, right, and look at the points of control. If you've got value overlap, chances are you're starting to range, right? Especially if you've got value overlap after a strong move up, then you're almost certainly going to go into some form of consolidation. If you're not, you're probably in a relatively unhealthy asset, and you probably want to be looking at some kind of like parabolic short setup. But you know, we've got value migration higher. That's great. It's about as much as I need to know intraday. The key thing for me is then, you know, what I'm looking at for the previous day. I want to see us establishing ourselves if we're in a trend upwards. And I think Luke hit the nail on the head for this. Really hard to just, you know, to buy these things that are just pumping, right? He called it something really young and cool, like top something.
I think it was top blasting is what the cool kids are calling it these days. Yeah.
Literally would feel like a dad at like a child's disco or something if I use terms like that. But Luke got away with it, man. But like, you know, look, we've not got price on here. So what we're looking for, these key areas here, we're looking for price to establish itself above. Goes back to our high time frame plan. You don't need to overcomplicate these things, right? So really simply, I'm kind of looking in here. I'm going to put my daily open back on and just turn these off. But you've just got kind of like a pre-made set here. And then obviously what you want to do is this pertains to the current day. So you're moving it forward. Right, and then you've got your line in the sand here. So we were long yesterday into these highs, and the reason for that is because we've held the daily open. Daily open is massively respected of traders on all time frames. VWAP, which gives you your weighted, obviously, volume average price. So then as we break above this, I'm just kind of saying to myself, where can I get involved? Again, I'm kind of going back and I'm saying to myself, where did the sellers last control the market? You know, and just really simply, if these guys in here can't keep this market suppressed here, then they're offside. Right, and at some point they're going to want to cover that position, or they're going to want to get out of it, and then we've got liquidity at the high. That then ends up being equal highs. It's a massive draw on liquidity. So I'm then looking, okay, where can I get involved? This move up was actually really aggressive. So like we were talking about before with momentum, if you see these large moves up, then what I want to know is I want to know what's happening in the impulse leg. right? So as I'm looking at this from the low to the high of the move, I just simply want to see price coming back, looking at these low volume nodes, holding the value area low, and that's where I'm looking to get involved. Today was slightly different because, you know, this again, we've just extrapolated yesterday's value area high and low in this garishly pink box and brought it forward. And actually something that I've done slightly differently here is I like seeing these VWAP deviations, right? So this is a session VWAP, so it again resets at the same time as the daily open. So immediately when I'm scalping, I'm asking myself, are we above the daily open? Yes. Normally a little bit like Luke, I don't really like this if we're massively overextended, especially on an ADR basis to the 50 SMA. But what I'm actually looking for here is saying to myself, okay, when's this thing giving me a trigger? And what I've done here is I'm just looking at that last expansion leg. Now, because we've come out of a consolidation in here, for me, this is creating a new dealing range, right? So as we move into midday, which is when our trade triggered here, because look, you'll see the dots at the bottom, which are fairly similar to your ICT style kill zones, but they're much more relevant for me if I'm trading the NASDAQ or the S&P 500, like the ES contracts. If you actually do the volumetric studies of crypto, the volume starts to come in a lot closer to midday. So as long as I'm not, yeah, it really amazed me as well, right? And actually I was lazy with this for years, and I went back through tons of my data and realized how much I really kind of hurt myself with that, because I was waiting for the kind of, you know, the New York pre-market, which 1:30 normally kind of UK time, and then obviously the cash or equity market opened at 2:30 when, you know, as you share those wonderful posts, you know, like quick move offside and up we go. And actually, if you apply the right context to that, you can do it. You know, I'm probably a stock trader first and foremost, and most of my stuff over there is done completely differently. I'm using moving averages, looking at high time frames, and then using like 5-minute opening range breakout plays and stuff, right? But to get back to the volume, with this one, I've just taken a volume profile from the low to the high, and I'm just studying this, and I'm moving it along as we get into the session. Now, the key thing for me here is I want to see some form of confluence. So I want to see a move to the offside. I want to know that we've taken liquidity, that we're trapping traders. In this case, it's an interesting one because we are a little bit overextended. So rather than take this early, which I'm not a fan of doing, I'm very much a stickler for the rules. I just wanted to see this demand get set here, right? So just simple, last up candle, any SMT, SMC or ICT traders will know this as well. But this is, you know, this ultimately is, this led to the down move. You've got the breaker in here. You're then looking for the down close candle to set the order block. Great confluence, above the point of control for the move, rising VWAP. And then I have one of 3 different entry methods. This was a little bit ugly actually, and I got stopped out of this over here after taking partials. So I'm not a Chad like Luke. I am not like, I haven't really strong armed this one in, unfortunately. But I was going to look for a re-entry in and around here. It just looked to be flattening out, but this is a really good example for me. This one was actually taken on an inversion setup. Like Luke said as well, you could have got a really nice re-entry in here. So this, as price is kind of pumping up here, then that was my only real opportunity for a trigger here, because as we, you know, I normally feather into positions, meaning that I'll take like a 20, 30, 40% position if we're quite higher, and then look to add as we came in. But I do like to have some equity market or indice confluence for that, which we didn't have at that time. But like Luke said here, if you were looking for that retest, right, if you missed that first move up, this is, I think, where volume profile kind of comes into its own, really. You can just pop that up here, right, get that from the low to the high of that move. And as you're looking across, whether you're somebody that fixes from low to high because it's only an expansion leg, or whether you're somebody that looks at that from a developing profile perspective, you know, you step back into that range here with a nice bit of displacement. You've got really fixed risk down here, somewhere you can put your stop, and you know, you've got an immediate target as the value area higher. You do want to have a little bit of consideration for the POC, but not on really low time frames. But if I was starting out now, I would just say to people, look at a 15-minute chart, right? Put a VWAP on, get your daily dividers on there, look at your daily open, right? And just say to yourself here, you know, are you above the daily open, right? It's a sign of strength. Are you above VWAP? Is price trending? Because if you're consolidating, right? I mean, we've had some really lovely trend days. So all of these, if we go through them recently, are just going to look absolute bangers. But I mean, look at this car crash. If you're a trend trader, right? Price just comes in here, Thursday, Friday close out, just absolutely goes sideways. So don't kind of, just don't second guess it. It doesn't, from like here, you've attacked this high, you've attacked this low, and you're back inside. So there's absolutely no reason around here to think that this thing is going to trend any lower. And you either find the base of the consolidation, or you can find the last major impulse leg higher. As you move back to this day, you're just shorting these highs and you're longing these lows. And then I don't account for the VWAP. Right. Because for me, this just gets in the way. You know, I'm below the daily open here, so I can say to myself, right, well, I'm favoring shorts from the high. But when we're trending, you know, VWAP can just give you so many more things. And I love how Luke uses it for kind of re-entries and stuff like that with the trading, or even just as an entry technique as well, very traditional market style, looking for price to move in, get that absorption, and then just really kind of pop. But, you know, it's just all about study and data and data. And if you're an intraday trader, you know, these two indicators alone, you know, combined with, you know, if you want to add this layering in as you get a bit more advanced, looking at these session profiles and saying, okay, you know, how are we in comparison? If this is the prior day's value area, we're already quite extended above it, and we get that pullback to the daily open. You've got confluence there from your supply or demand, depending which way you're trading it. You get that little deviation in here. And then, you know, you're off to the races, but you've just got 3-4 points of confluence at all time. It just helps you be a lot less hesitant with entries.
100%, yeah. Like, it's something that I'm always trying to stress is like you're effectively building a framework, right? With all these different analytical tools. You're not trying to say that one is better than the other, or one is, you know, supersedes the other and then you ignore the rest. It's all about building a coherent framework in which to trade, right? And that means you're looking at a multiplicity of factors. You're looking at the chart in a kind of a holistic sense, like what is the context here? What's actually happening? You know, without getting too caught up in any one or two methodologies. So I love that. I love that approach, and that rings true to things that I've been saying for years now. Something I want to touch on, I want to pull a little bit on, is that you said you know, you mentioned other markets and how they behave slightly differently. I know that you trade. Am I right in saying you trade NQ?
Mm-hmm.
You trade NQ a lot, and this is something that Luke and Victor will both be able to touch on as well, because they're also crypto traders that trade NQ. How have you found trading both crypto and NQ, particularly over the last, let's say, year or so? Because I know a lot of guys will say some very negative things about crypto, particularly intraday PA, while saying that maybe NQ is giving cleaner reads or price action that's just easier to trade in general. So what's your take on that?
Yeah, so I mean, look, NQ and ES are just proper markets, really. Crypto's just still such in its infancy, right? You got trillions of dollars every day that run through NQ and ES. So if you get on the right side of those, the moves just hold. You know, you don't have a fucking Raoul Paul or someone popping up to rug you, or do you know, like, it just doesn't happen like that in this, right? So if we look at the current forward-facing contract here on NQ, and this is on extended hours, if we put this on regular hours, for people that don't know that, you're basically looking at all the hours and all the markets at that point, right? So you're looking at the Asia, so the overnight session, London. I keep this to New York, right? Because I want to see the gaps up. I study the overnight price action. The wonderful thing about the NASDAQ is that the sessions open and close. So immediately you've got like a cash session profile, right? So we know, for example, whatever on this day, if we take the cash session, unlike crypto, because it's a 24/7 market, right? We're looking across this and we're going, okay, you know, where were the major players positioning themselves during the cash session, during the, you know, you get the pre-market in there, but this is the actual equity session. This is before, this is after pre-market, right? This is just cash. But the moves in the NASDAQ are really, really, really clean. So with the NASDAQ, I think it's a very different animal to trade. So I trade very different strategies on the NASDAQ. So I'm a big fan of like 1 minute inversion strategies, for example. You know, again, I'd encourage people just look at, you know, a day, even if you draw a really, really simple dealing range on the day from low to high. Let's see if we can do that with a fib. Right, and then we'll go to, so I don't know if you guys can see this black line here is just the midpoint. Then, you know, on a 1 minute chart here, we've got a deviation of VWAP. If we move to say a 2 minute chart, which I won't because it will just go through, then we've got prices overextended. We've had a long run up, right? We've swept a key high. We've smashed into VWAP here. We're above the top 50% of this, meaning that from a risk to reward perspective, it's going to appeal to intraday traders to short here. And then the gaps should really be supported, right? And you know, if you look in the move up, even these slithers of gaps, right, in here are just massively, massively respected. Nothing's closing below it, right? It's just giving institutions, major players, the opportunity to just refill and push higher. As soon as you see that drop down there with momentum, you've got great risk here. The reason I favor inversion setups is you can just get a little bit frustrated if you're waiting for these real clean, like market structure breaks, momentum moves to the highs. But I think actually a lot of people have struggled with NASDAQ because it's been so, with crypto, sorry, compared to like NQ, because it's been so correlated, right? You know, the correlation has been some of its highest it's ever been, right? For a risk asset pair like that. And if you want to study that on any time frame, really, you just go to your little plus sign up here, get the NASDAQ contract on here, add it to a new price scale. Obviously, it looks a little bit wild on something like this, but especially if you take it to like a daily and then you move this to a line chart, just like study the correlations, yeah, or lack thereof. I mean, we can see here, right, in terms of the grind down, yeah, we do flush a little bit harder in crypto, right, because the markets are a lot less liquid and they're controlled in slightly different ways. So crypto's kind of a game of liquidations, really, and more of a kind of positioning game in like the NASDAQ. But the correlations between these two have just been really strong, but there were just some periods where they just flew in, flew out, and it just started to get really, really frustrating to trade it. But ultimately, whatever you're trading, whether it be indices, whether it be you know, equities, stocks, it's just about getting really, really, really deep into the data and understanding, okay, how does this move? Yeah, because if you look at this chart now for like the NASDAQ, what we were looking at, and I know these are closed session times, what we're looking at compared to before, daily open, before and above, not really working as well, right? You know, I know Follish, you post about this a lot, right? Where we're talking about the, you know, you look for the equity market open, you get the flush to the offside, and then you get that kind of reversal. It's kind of looking for that because of just the mad hunger for liquidity in those markets, right? Multi-trillion-dollar markets. So you're moving into key levels. You're very rarely getting these kind of, you will get similarities, but not in the way that we see it in crypto. So for me, I love trading indices. I think they're really, really clean markets. I think they're cheap because you can just open these contracts at like a couple of bucks a side, right? I think you get hurt on the lower time frame. So when I was taking initially my low time frame systems from the NASDAQ onto crypto, I was just getting absolutely obliterated on crypto for fees, right? You know, like what I can open for $5 on NQ and get $20 a point for on like a mini. You know, I could pay 30% of that position back in crypto, right? So it is kind of understanding those markets. But I think if you're an intraday trader, you're probably going to love both. But I think you kind of need different approaches in truth.
Yeah, no, that makes a ton of sense, and that kind of resonates with what I've heard. I'm not an NQ trader. Most people will know this. I do not trade NQ or ES, but I've heard exactly the same thing from other NQ traders, such as Luke and Victor, which we have on our panel. So yeah, I'm curious to know, Luke, does that ring true to what you were seeing in the indices markets? Is that kind of your experience over the last few months in particular?
Yeah, absolutely. So again, for myself, I trade NASDAQ completely different to how I trade Bitcoin. It's much more, I've said this a lot of times, like my average hold time and trading the NQ is 1 to 4 minutes. So I'm just in and out really, really quickly. But one thing that I do is I really like it to add confluence to when I'm trading Bitcoin. Because I'm not really looking for the bigger moves on the NQ. I'm just looking for levels that will get a reaction. So that's very often it's such an efficient market. So you know that if you're trending, if there's any imbalance, any inefficiency left behind, and price comes back in, and then you have this impulse. So you almost have both things lining up together here, where in a way you've got like this move down, okay, that comes down, hits the VWAP. This is the London VWAP, which I think works really well on the NQ. You then get that inversion here. And then you create, like, you impulse down and then you impulse back through it. You're continuing the trend, so you know you're looking for longs. And then where does price come back into? Okay, it just comes in and deals with the imbalance that we've got here. And again, you've got a little bit of an inversion here, and then you're just looking to go on and create new highs. And it would be a similar thing maybe now if we were to get like a move down here, what you'd be looking for is a reaction off of this level, and then for continuation higher. So you're really just looking for those points where you can get the reaction from the market, and again, like today, just looking to continue trading that trend.
That's fascinating. Yeah, I love that. Thank you for that insight, Luke.
Yeah, really, really cool.
No worries.
And just to really just chime in something here as well, I think what you will always hear from the very best traders, people that really know their craft, you know, you listen to Luke speak about it, Vic, Follis, etc. It's never, you know, let's just look at this and find something. It's like, I know where I'm looking for this to happen. And if it doesn't happen there, I'm just not in it. As much as that can be frustrating, and as much as you'll take really bad trades from good areas and good trades from bad areas, if you are patient in this game, like, you know, I think it was Larry Williams, you know, multiple Robbins Cup winner, and that's like the World Cup of trading for anybody that doesn't know. And they said to him in this interview I watched once, you must just be like a once in a generation trader. And he said, I'm actually a really average trader, but a really exceptionally good risk and money manager, right? And he just, his understanding of levels and where he's willing to be active and when he's willing to push his stops up and where he wants to kind of get that risk, you know, exposure, or where he wants to dumb that risk exposure down, you know, consistency is absolutely king. But yeah, I think all the best traders know exactly where they're going to look to execute a trade. Not, you know, one of the difficult things with price action is the pattern recognition side is so many people just open a crypto chart and they're like, my God, a bull flag or a market structure shift or whatever. And just, I'm in, and they're like, I can't work out why I keep getting smashed to pieces in my account, right? Just tight risk management, learn really well, and just know your levels. But yeah, sorry, I had to kick in with that because it was just a point raised by Vic, point raised by Luke as well. And I think it's really, really important.
Yeah, 100%. I think that something I shared on my stream like a month ago was kind of the meme of the bell curve, where at the bottom it's like the idiot guy saying like, you know, we're risk managers first, traders second, and then in the middle of the bell curve it's like, no, you can't just manage risk to be an exceptional trader. And at the top of the bell curve it's the guy with the hood saying we are risk managers first and traders second. And that is legit been my experience like
Yeah.
over the last 5 years trading, and kind of that journey to consistent profitability has been pretty much exactly that. You know, you really do have to be ruthless, is the word I always use. You have to be ruthless with sticking to your rules and managing your risk, or the market will manage it for you, and we all know how that ends. Conscious of time here, so I just want to move on a little bit. I wanted to talk about altcoins because, you know, I know BC, we've spoken about indices, we've spoken about BTC. I've seen you post altcoin charts in the past, and I've seen you trade alts. But would it be fair to say that you're maybe not trading them as much at the moment? Is it that because of price action, or is that just my misinterpretation of things?
No, I'm just, there are a couple of things. One, I'm really terrible at posting on Twitter and socials, so I just don't do that as much as I should do. I think I like trading alts. Sometimes it can be difficult from a liquidity perspective, right? So sometimes they're just a little bit too illiquid for me to get involved with. And understanding that's really, really key. I like trading alts, but it's kind of like my methodology with trading stocks, right? Which is, you know, the lower cap that you're going to get, you can get these beautiful volatile moves and you get these huge like super normal returns and stuff, but catching those moves are engineered by the holders of those products, you know, those tight consolidation bases, those big runs. People won't want to hear this in crypto, and they never have, especially when I've spoken on stage and that. But if any low cap bull, and we're not just in the most mental of old school bull markets, has a 3-5 day extension, then, you know, I'm looking for a parabolic short on that. You know, I'm looking for that to come down and come down really, really hard. So I'm much more of a shorter of all coins. I know that, you know, a lot of people in the crypto space are really in it for the tech, and, you know, the fact that I had to ask Marquise how I even joined this stream shows you I'm in it for the price, right? So I mean, whatever the ticker is, I find that they move a little bit more erratically, right? And I find that you sometimes need a little bit of a different approach. Like for me, I'm looking at kind of ATR or ADR on stocks like that, right? How much are they moving in a day? Because if it's too much and we're already overextended, I've got to have my stops too wide because the noise is there so much. But, you know, like on my watch list, or the main things that I trade, you know, like ZEC made it on there recently because I just wanted to short the crap out of that a while ago, and they've been long that kind of since. And then, you know, Bitcoin, ETH, Solana, Hype, I do like a momentum and volatility scan every day just to see if one's come on the charts. And obviously, you know, when you work with really, really amazing people, and you have those kind of analysts that you know, from a fundamental side, are like, you know, bro, you need to check this thing out, right? You know, we had it with Monero, a few others from like the FA team that were just like, look, maybe not a trader's paradise here, but what I would also say to most people is you probably shouldn't be trading alts. You should probably be trying to position into them and using it from a fundamental side. If you do, just make sure they're quite liquid. Yeah. And then on the liquidity side, then, you know, just study the damn things that you're doing well on Bitcoin or on NASDAQ or on whatever, and then just see if it works on them. Don't just kind of assume that because it works on Bitcoin and ETH, that it will work on others. Like, you know, Hype probably is right up there as well. That's like a major performer now as well. But like, you know, ZEC, I was getting stopped out loads on the way down, stopped out loads on the way up. But you know, you're going to get those big returns when you catch those big flushes, right? But you have to kind of be ever present. So yeah, you know, long answer, but I will trade them. But to be honest, I can normally get, you know, for my systems, it normally suits to stick with the kind of bigger players, really.
Yeah, it's funny what you're saying there really rings true to me. You know, this idea that you're just trying to short these overextended alts, but that always like makes me question myself, because I'm like, but like these things are intrinsically like worth nothing anyway, and they're just like Ponzi schemes, vaporware, pumping on no fundamentals, empty promises, etc. And it's like sometimes, man, I'm like, why am I trying to catch the top on this asset that can literally like do a 5x overnight? Like, am I losing brain cells here, or what's the story? But yeah, you're right. I mean, sometimes it's really, and that comes back to the point we made about risk management. You have to be so ruthless managing your risks, especially when you take those altcoin shorts, because you're trading an asset class that can absolutely destroy you unless you're really being tight with your stops and disciplined with your invalidations. But yeah, I guess it's like, you know, I made the point about this coin Pippin a couple of months ago, where it's like, I really don't recommend that people trade shit coins like that. But somehow I managed to make like 15 grand trading it in January and February, because I caught like, you know, I got stopped out 3 or 4 times, but I caught 1 or 2 nice shorts, and that was basically all I needed to do to pay for those stops and then some, right? So it's I agree with both sides. I think what you said, which is that most people shouldn't be taking those kind of trades, I agree with that. I think that it's something you should only really be doing if you're an experienced trader, if you have proven profitability trying trades like that.
And
Otherwise,
well, right?
sorry, go on.
You know, sorry to interrupt, but and the system as well, right?
Yeah.
You know, if you look at me with my stock portfolio, for example, and especially with the parabolic shorts, or if I'm looking for like flat base breakouts, or you know, high tight flags on MA reclaims and kind of strong moving assets, then first of all, identifying the sector, identifying the strength that's coming into that sector, the outliers that are leading the sector, etc. Right? But I then have a very clear system in place. I mean, some of my win rates in there are in the low 30%, right? But my average risk to returns between 7 and 12, you know, across the different asset classes.
Right.
So you just got to be willing to sit there and get kicked in the nuts 3-4 times in a row to just get one win. And actually, you know, I'm a guy that suffers badly with ADHD. You know, I'm a very kind of, I wouldn't say a mood swingy kind of person, but like I have high highs, I have high lows. And you know, the beginning of my career, swing trading killed me. I just couldn't sleep. I was up at every hour just checking the chart, and then would just stop myself out and just go, oh, I don't know, just so I can sleep, get up in the morning, and I'd miss like a 2-3x, right? And that's what funneled me then into doing the intraday trading more. And then as I've got a bit older, I kind of swing it a bit more back to the swing trading side now, although I still don't really swing crypto, like certainly not like you do. But one thing I'd like to say on that is I think a lot of traders don't take the time to learn what kind of style of trading suits them. They'll see somebody they like, or they'll see something specific they think's amazing, but then can you fit that around your lifestyle? Can you actually execute on that, right? Or are you trying to be an intraday trader with 3 kids at home and a really demanding career, right? And you're just trying to jump on these charts and kind of do the impossible. If you fit those things together and you ask the kind of difficult questions, and I know that's something you guys do here, which is another thing that I really admire, and why you have so many good and so many varied styles of traders, right? Like, it kind of almost sounds a bit like a Star Wars comment or something, but the style of trading can find you, right? Rather than you just try to enforce, like the markets, right? Don't try to enforce yourself on something that's just not working. It might be the case to just kind of step back and all of a sudden you see something that really clicks, and then you can go really deep into it.
100%. Now, I'm just conscious that we're coming to the end here, so I'm going to ask two final questions. The first one is just for you, BC, and then I'll ask one for the rest of the panel. The one that I will ask the rest of the panel is, will we have a green or a red May monthly candle? So you can be thinking about that in the back of your mind. But the first question I want to ask you, BC, is just, it's a very broad question. There's no right or wrong answer. What has you excited about the crypto market in 2026? Anything. It can be anything. It can be price action. It can be, whatever the fuck. What has you excited about crypto or about your own trading in 2026?
Volatility, right? I think we're just in the volatility is just insane at the moment, right? Very news-driven market. You've got an absolute weapon like Trump in charge of the US, who I admire on some fronts, but obviously he's a deplorable human being, and a really sad state of affairs for humanity that people like that can rise to that position, right? But ultimately, they are going to want to keep the market's volatile. A lot of people don't realize, the US have to refinance, I think, 7 trillion of their own debt or something this year as well.
9 trillion is what I heard. Yeah.
9, yeah. I mean, they're going to want those yields down right on the bonds. So I'd be a little bit kind of wary about that. But ultimately, as an intraday trader, you're living and dying off your volatility. What hurts in the bear markets are, you've got to accept those quicker and smaller profits. The volatility excites me. The space does still excite me, even though it's one that I'm not really, really deep into. What I loved when I came to the crypto industry was, this, rebel pirate element that everyone was just like, you know what? Fuck you, financial tech and all this other crap, right? We're going to take our money back. And then nobody asked the question that, fuck, to make this work, we need to convince the banks to let us do this. And they're obviously never going to do it. But we had a golden few years, and it doesn't mean that that's not coming back. But what people really don't want to hear in this, I think, I'm really, really looking forward to getting short this market when it starts to blow up. Because, I think it's so oversaturated. There's so many things that are going to basically go to zero that there's going to, lunar type situations, right? And I know that sounds horrible. And if it's your favorite project, I'm really, really sorry. But from a chart perspective, waiting for those real aggressive blow off tops or for price to go up. And that's assuming that we get back to all time highs and that, right? But I would say if I had to pin it on just one, just for me as an intraday trader, volatility, and that's king.
Love to hear that. I'm so glad that our finishing note here is you can't wait to short the market to zero as everything burns.
You're so glad you invited me on now, right?
Final question for our panel. I'll come to you last, BC. Victor, are we going to see a green or a red May? I think I might have asked you this last week, but
Yeah.
no harm in asking again.
I think green. Simply because when we looked at the chart, I said because we're between two value areas, I cannot decide on a direction, but we're moving towards the value area higher. So I think it's slightly higher chances that we finish May in the green, also with the exceptional start that May already had. I think simply if you look at some options for that expire at the end of the month, you'll see that it's a higher chance that we end up with a bullish May than a bearish one.
Luke, same question. Green or red May?
That's tough. I don't think if we do close green, I don't think it's going to be by a lot. I don't think we're going to continue with a month is quite a long time, and price has been moving quite a lot, and this is going to be difficult to sustain. So whether we get the pullback by the end of May, I still think the market's going to go lower over the summer. Whether we close green or red, I'm not sure. Maybe we just close at a doji. I think there's going to be. I think the monthly low is going to get taken at some point. But there might be enough for that to recover. Again, we're a few days into it, so there's quite a long. We've got a lot of time left for this monthly candle to continue. But it's not going to continue just going the way that it has. It's been a great start, but I am expecting there to be a pullback at some point this month, and I would be surprised if it is a big green candle. I think we're going to have a big wick at the top. Whether that's a green wick, like green candle with a big wick, or we're going to have some reversal hammer or something like that, I'm not quite sure yet.
Okay, BC, same question. Green or red monthly May candle?
Oh, okay, interesting. So I think, Jesus, I mean, I even had to open the monthly chart for this, right? But I think looking at it, and I remember looking at this before, something where I think we're showing a little bit of strength, but I kind of with the other guys on this, I think we're going to show some early strength that could get faded pretty quickly. Ultimately, risk markets are holding up really well with inflated oil prices, but $110, $112 a barrel isn't sustainable for risk assets for that long, and that we will start to see some sector rotation at some point. However, just looking at it from a purely technical standpoint, which I love doing on the higher time frame, something that gives me a little bit of positivity and why I think we could drive into this is we got that initial rejection at the monthly bearish inefficiency, the fair value gap, right? Price just wicked into it a hair and then really shot away. Now, normally with gaps like that, if you see a strong initial rejection, then you see a bit of a continuation to the downside. The fact price is kind of trading comfortably above its prior monthly high at the moment, is going deeper into that inefficiency, it heightens the chances that we fill that inefficiency a great deal. But like Luke said, it really wouldn't surprise me to kind of see this pump, classic move, people get into it late, everybody's looking for that upside. That monthly candle closes with a big wick into that gap, and then we start, coming back down into those lows. I'm not sure it's over yet. I think it's holding up well considering, the geopolitical situation, if we're honest, as is the NASDAQ. But, when things start to get ugly, or if they start to get uglier, then I think ultimately it's going to hurt. So I'm going to say that I think we just about hold it green, but I would expect it to look like a bullish body closed pin bar type candle. That's what I'm going to go for.
Okay, I like that. I just shared something I saw on X in the chat here, which is since 2017, whenever BTC had a green monthly candle and the next month also opened green on day one, price traded higher within the next 60 days in 30 out of 33 cases. So 90% hit rate. The average upside for this was 39%. So therefore, I'm wondering I'm wondering whether or not that's the case of just flipping the 4 heads in a row. Exactly. And then assuming that the fifth will be stats. But I'm going to say green for reasons unrelated to that. I'm just going to say that this is a successful auction and that we're migrating higher. But who knows at the end of the day? And something that I'm always trying to stress to my guys is not to be a predictive trader. Leave the predictions to psychics and fortune tellers. We are reactive traders. We wait for the market to give us information and then we act on that information. But we're coming to, we're 10 past now, so we ran a little bit over, but I want to say a huge thank you to my panelists, my handsome panelists, my Chad intellectual panelists. We had Luke and Victor, and of course the one, the only BC Richfield, who was good enough to give us an hour of his time today. That was an absolutely fascinating chat. We talked through not just his thoughts on the market, but also his trading style and approach to analyzing and executing on a chart. So yeah, thank you hugely, BC. It was an absolute pleasure talking to you.
Awesome. Well, thanks for having me on, guys. It's something always happy to be around fellow traders and proper traders as well. And you guys really are proper traders. Great community, awesome people. Love Victor bits, love Luke to bits, love the whole crew. Johnsy as well, I have to say, not that I want to pick favorites, but fuck how that guy picks some of those trades sometimes just still amazes me. I love that. But just awesome plays. If you're watching this, just stay here, work hard, listen to these guys. They actually share what's real, not what they're trying to sell you something, right? But just a big thank you, lots of love to everyone. Hope to see you all again, and best of success for the rest of the year and the season ahead.
Yeah, I think we had like 7 requests for you to come back on a live stream or on a market roundtable. So
what's the average? Is the average like 40 or something? Because if it's 40, then that's not great. But
I think the average is probably about 1. So yeah, you're already well ahead. I think I might have a revolt on my hands if we don't get you back. So with that in mind, yeah, thank you very much for joining, and thank you everyone for joining today. We will be back next week with the next Chroma Market Roundtable. Until then, try not to get liquidated, and we will see you next time. Thanks again, BC Richfield, and yeah, talk to you guys soon. Bye bye.